Okay, I'm going to do the end of day review. Today is April 8th, so 8 minutes after 4 p.m. Eastern Time. All right, yesterday was way too volatile. The bars were moving so fast. I mean, just one bar ended up moving 233, almost 34 points. Combined two bars, nearly 300 points. It's crazy. And it just comes back immediately as much. So Monday was very strong, but it was a bull flag, and then it got a slight breakout. But even though it looks like an inverse head and shoulders, you're in a trading range. This is very difficult. A volatile day like yesterday is you're gonna have continuation the next day with that same volatility. So we had a gap open here. Let's take a look at the after hours, right? So market did continue. In fact, I mean, think about it. So you have a measured move. That was the measured move target on the ETH. And anybody who continued to buy, I would measure it from there. This came down. I would probably say I'll take that. We couldn't really get up there. Then take the trading range, which is right here. That was the that was the measured move target. Did you guys see what I did there? So basically what I'm doing is measuring this trading range, just this one, and projecting up. This is actually is what you see here is very similar to a FOMC day price action, and you can see it's formed a bull flag breaking out. It drifts further up, so I projected this trading range up, and that was the measured move. So is Asia today gets a breakout and into the London session, into US session. So US session always gets a breakout. US session is a continuation of London most of the time. And then it formed a head and shoulders and then started to come down. So you have a measured move target, and then you had continuation down 2R right there after a pullback that was profit taken there, and then continue to come down. You can also say, hey, I want to take this, maybe the gap right here. I want to continue this down, but I wouldn't do that. Just take the break and then retest and then sell. Don't try to push this. Like, you should be taking profit here and be done. I had an additional target there, so you could have also taken that. But you really need to collect at the end of the day. So we had, okay, what I was trying to show is that we have a wedge top. It's a spike pullback and channel. So a spike pullback and channel with 3 pushes. We're going to reverse back down to these levels. And bulls want a double bottom, but instead of making a double bottom at this bar lows, we ended up breaking. And then we formed a double top bear flag and kept selling. So you got to wonder that if this is the left shoulder, that's the right shoulder, that's the neckline or neckline, doesn't matter. This is selling. This is not going to reverse back up to these highs. So you need to now, you're in a swing. You can even take this whole thing and project it down. So that could be also your measured move, because instead of having a double bottom here and going back up, instead we're denying bulls, okay, retest of the high. So we're coming down and taking this. That means is you should be looking for perhaps take that, take that, take that. So that would be your measured move, okay? This entire move up is intact. You could even extend it a little bit lower. That is 6 p.m. open, but I don't know. I have a target here. I wouldn't do that. I would take the Asia low if you're looking for a reason why it would go that much. But to me, I would probably take this, maybe take that. Since the leg started here, bulls, this would be my measured move. And if I take that and look at that, comes down, that right there is profit taken. This right here, you kind of would deprive yourself from this move down, but you already made ton. So I want to show you that this is right here, wedge top and reversing, and the reversal failed. So is now reversal back up failed, but reversal to bear side is actually pretty going pretty well. So US session is opened up with bar 1 is gapped up pretty much, but bar 2 is bar 1 is a very strong bar. It is way too high. I don't know if bulls are interested in buying this high, considering the first bar actually closed pretty strong bearish. So if the market does not think that this is a fair price up here, we might need to come back somewhere in the midpoint of maybe here, maybe here. But even though we start to come down, we can even close below nor test here, so bulls start to come back again after the second bear bar. So anybody who sold underneath bar 1 or the close of bar 1, they are scalping. They might be in hopes of a trend from the open, okay? But suddenly you get this inside bar 3. So many bears are thinking, hey, this is a bear flag, bar 1 and bar 2, and the inside bar. So they're going to start to put their sell orders underneath to here, and they're looking for bear bars closing on their lows. Now, where are those bear bars? Is 4. But first of all, where are the strong bull bars? Bar 3 is not all that great. So, but the bears will look for that second leg down. So bar 4 is testing above the bull bar and then closing a bear. So that is right there, a bear flag. But the bar 4 is not all that strong of a bear body. So hold on, guys. I need to turn off this. Okay, here we go. So bar 4 is not all that strong. So I wonder if there are any buyers underneath. But anyway, so if you do sell and then suddenly you get bar 5, you're pretty much stuck there because the bear flag failed, is low 2 failed. When a low 2 fails, this gotta be, to me, is a bull flag. So everybody discounts this right here is a one big bull bar, right? So now they're buyers right there. And you can see now we have a huge bull bar. They trap the bears. So those bears probably going to sell maybe 20 point, 40 point above. Why 20, 40? Why it's not 5 point or 10 point or 20 point above? Well, ATR at that time, when we reached there, it was already 37 points. So it's telling you you're going to have to wait. So from here, start counting. Maybe 20 points is maybe 37. I would look for a 40 point. So here's 40 point. Is if I'm going to sell and I'm stuck underneath 4, right? They're buying from there. Is what do I do? Well, I'm going to have to wait, press to get to the 40 point. Then I start to enter. But I want to see a bear body closing on its low before I sell anything. So that bear body is definitely not bar 9 because you have is 1, 2, 3, 4 bull bars, is tight bull channel. First bear bar, it's not even closing on its low. I'm not interested in selling. Bull's probably going to try to keep going up. There might be also maybe I don't measure it like this. I measure from here, exclude the wicks. That was the measured move. So, okay, is 40 points up. Measured move is bulls are taking profit, but nothing's closing above the measured move. I don't think we're going to go any further. So now what do I do? Well, if the bears are stuck here, and we already reached 40 points, so think about it. You're a bear, you're selling maybe the close, is maybe one tick underneath 4. The qualifying good-looking bear bar is actually bar 11. Anybody who sells one tick below bar 11 is looking for an 80% probability of breaking even at an average price and a 60% probability of coming down and testing around maybe the close of 2, maybe underneath 4. give the bears a chance to break even fully. So that's what we expected. And machines start to sell is increments, 20-point increments. Now getting their average break even, and then bar 16 actually did close below the 50% slightly. There you have it. So that means it's going to continue probably come down. So you should be selling and expecting a full break even underneath 4 or the close of 2. Not only that, bears did give a full break even, they also closed bar 18 pretty low. So now what you have here is a double top, micro wedge top, neckline 12 or 13, bear bars closing on their lows. So you have a low 2 from the high. So you get a low 1, low 2, high 2 failed. Okay, just like here, low 1, low 2 failed. This must be a bull flag. So this must be then, if this is high 2 is failing, this must be a bear flag. And in fact, we now have a very strong bar 15. Okay, I sold that bar and then I kept selling into these lows. Like, this is fantastic. I'm really interested in selling this further down. So to me, this was right here. Bulls try to break out. Bulls try to break out for the second time. Failed. Bears try to break down. Bears try to break down. So you got double tops and double bottoms. Failure of a failure is a swing. How do I identify my swing? I need 2 consecutive bear bars or bull bars. I'm not getting any of it. Bull did get something here, but they couldn't really go to their target because they weren't failure over failure here, right? They were in 2 sets of double tops and double bottoms, but we do here. So double top, double bottom, double top, double bottom, and then huge break is second bear bar. If you measure it, that was my 1R, that was my 2R. And we ended up actually testing. We ended up getting the 3R. If you keep selling into these targets, we ended up getting 5R. I don't even have more, but here, I'll measure from here. So that is 1, 2, 3, 4, 5, 6, 7, 8. We had 8R before we actually reversed at the end of the day. Okay, so you could have just kept selling and selling and selling and not look back. But then what about the measured move? Well, we do have a nice measured move here. First, you could take this small trading range because you're not obviously seeing any of that. This is what you're seeing. Here's your measured move and then you're looking for 2 times the measured move. Wow, now we're getting 3 times the measured move. Okay, and we didn't in fact actually test it before moving up, but there's got to be something else there. What if I take this entire leg, bull leg, and project it down? Roughly that will be my measured move, which we got it. And then we start to take profit, but then we start to close below it. At this point, I'm interested in taking the whole thing. And that's what I'm going for. Now we're closing below. We should come down even more. So I'm going to go for projected targets. Look at that. So we came very close to this at the end of the day. I mean, you're going to get some, problems at the end of the day. That was a failure. That's because you should have measured from there, or at least the bull leg, which is starting point is 3 low. And that would have given you 1, 2, 3, 4R, okay, is if you're looking for better targets. So anyway, so stop order market is we are selling below 15, 16, definitely selling 17 is definitely, well, if you do sell 18, you're at the double bottom. Okay, so you're at the bottom of this trading range. Big up, big down. Confusion is it should go sideways, but it's 1, 2, 3, 4 consecutive bear bars. It's always in short. It just, and I'm seeing bear bars closing below the moving average. I'm looking for another strong leg down. I want to see bars actually is open and close at or below the moving average. So 18, 19, 20, and 21, it continues to come down. But problem here is that just like any trading range, we needed to actually bounce, and we kind of failed to bounce. So we need to get back to this breakout point, and that will be either too low, too close, okay, somewhere there. So we got another leg and another leg. So you have several legs down, leg 1, pullback, leg 2, pullback, leg 3, and finally we're getting a pullback, leg 3. You can also say this is leg 1, pullback, leg 2, pullback. The whole thing is leg 3. So we should be able to reverse back up to the starting point of leg 3. That is bar 20 is open or somewhere there. So we try to get there, but really the bull's goal is you got a nice bull leg here. Bulls are confused with this, and they want to get back and overlap with bar 5. That's how you know market can become bullish and actually test the upper third of that trading range. Only if it starts to overlap with that strong bar 5 like this. Now you can buy the pullback and expect follow through. That never happened. Bar 19 actually tried. Is bears are kind of scaling in, but who's going to buy against this tight bear channel? It probably wants to get more legs down. So is you have right here, bar 19 failed. Couldn't even go and overlap with bar 5 body. That is a bear flag. And bar 20, immediately sellers under bar 18 is 20 close lower than the 18 close. So I don't really like to sell one tick below 20 because the lower wick is pretty strong. So I rather to sell is either a pullback or the is close of bar 20. All right, I like bar 21. It's closer to moving average and it's gapping down. And I'll sell. But I'm disappointed with bar 22, even though I sold underneath bar 21. I don't like the fact that the 22 is not all that great. And it's kind of upsetting, but it's not a good buy signal bar. The body is too small. The lower wick, okay, when a body is that small, probably sellers above it. So if anybody sold below 18, sold again, bar 21, chances are they're going to sell again. Where are they going to sell? Right here. Starting at the low of 20, 50% upper third of 21 or the 50% of 21, they're going to sell. And at that time, ATR was, and pay attention here, please, this is important. If you're looking to sell, scalp, and swing, this is how you do it. You wait for price to get to the breakout point 20 low, and ATR at that time was 23 points. You go for half the ATR, so that's 10, say 11 points, 11 and a half. So you scalp about 11 and a half is okay. And then ATR, it was at that time 23, right? Then your entire scalp should be around 23. Take that 23 points and don't look back because it's going to reverse eventually. So if you sell at the 20 low, breakout test with 21 and the breakout test with 20, pullback 23, you enter around 21, 25, 59, 21, 25, and then you sell whatever the ATR value is. You made money. Congratulations. If you didn't take any of these trades and you just took that trade, you made average 23 points, and give 1 point or half a point to commissions. Is you just bank about 20 points right there. Anyway, so we go up, but I don't think the bears are done. What they're looking for now that they moved underneath moving average is they're looking for a double top bear flag. So I don't like the fact that there are only 2 bear bars and 22 is not a bear bar. So 20 and 21 is decent, but the 22 is not all that great. I'm not very happy with that pullback. And bulls are actually giving you a pretty strong 2 bars, 25 and 26. And even the third bull bar right there is, so when you have 3 bull bars, even though this is a counter trend up, it's most likely to go sideways and then try to get back to highs again. Bulls want another leg up. So their goal is to actually get back up to here and sell from here or maybe there. So this is the first sell, not a good sell signal bar, bar 27. It's a bull bar. So therefore, that's why I said we should go sideways. I would give bulls a chance to get back up here at least one more time. But nope, we try. We can't even tag, so now I have a much better sell signal bar 32. So I'm thinking that this is either a double top right there, or double top with 23 high, or I have a nice double top right there. Either or, it's a bear flag. Okay, so bulls are getting trapped above strong bull bodies, and the bears are able to close bear bodies right after those trapping, such as bulls getting trapped above 26 and the bears closing a really good bar 28 is okay. Bulls try to get the second leg up, so that's low one, low two. Bulls are trying to get the second leg up. They need to take out the 28 close. I'm sorry, open. So I actually told everyone, if we do take out the 28 open, then yes, we're going to go up here somehow. Maybe try to get overlap with this bar 5 body. But if we fail, which we did, we never closed above a strong bear body open. So that means I've got a double top there, I'll get a low 2 there. I'm just looking for a good sell signal bar, and I can stick my sell order underneath and sell. That is bar 32. I want to sell bar 32. I enter one tick below. My stop goes there. I'm going for 1R, 2R, 3R, and then 4R. You're done. Like if you're selling this strong bear flag, you should be actually taking profit at the 2R. Anything more than that is a bonus. Anyway, so market is selling, or you can also say, hey, I'm going to measure, hold on. I'm going to measure this trading range, and I'm going to project it down. That's my target, and that's my target. That's fine too. However you measure it, you better be in this direction and going down. Hold on, let me delete all of this. And so you have a earliest bear flag right there. Then we have a big bear flag right there. We have double top neckline, neckline 29 broken with 34. I'm ready to sell. And in fact, I'm going to sell every pullback. I'm going to sell underneath every strong bear bar. I'm counting small. First, it starts with very tight, like 2-3 bar trading ranges, such as 34, 35, 36. Strong bar 36, I could put a sell order right above 36. I could put a sell order right below 35. And then if I see the strong bear body, I could sell its close, or I could sell one tick underneath bar 37. Bears are selling, so you can even measure from there, right? If you sell, maybe there, your stop is there, that's your 2R. Maybe you sold underneath 37, that's your 1R, which they reach, and then that's your 2R. I mean, there's so many ways to make money, right? But that is the first small flag after this big flag. I'm still looking for at least 2 more. It has to be total of 3 minimum. So here's my second one. Strong bear bars coming down, impulse, and then we're getting a pullback. Okay, bar 40 is not all that great of a strong bull body because it's got an upper wick, but it's still closed on its high. Now, can we actually go above bar 40? I'm going to put a sell order above 40, but if we start to take out these 40 lows, there's no midday reversal. That means market is going to sell. Oh yeah, 42 does that. So now I can sell 42 close, 42 low with my stop above. I should be going for that 1R, maybe for 2R. Okay, it took a while. It went sideways, but if you're still stuck to this bear flag, you should be going for that 2R. Anyway, so it's coming down. It's nice. So that is after this big flag. Big flag that's the second one. That's the third one. Or you can count 1, 2, and here's another one. Here's another one before we get a really nice, I think it was like a 71 point pullback, 72. So I did count those, right? So here's a 1, 2, 3, even fourth one before we reverse. I did tell everyone that count your flags and then finally look for a reversal. But look left. There's got to be some kind of a support there before we get that reversal up. We have a wedge. Leg 1 is leg 2 and leg 3, and we are in a tight I'm sorry, we are in a tight trading range right around there. So is when we get in here, I'm looking for a good buy signal bar. Bar 50 is decent, but the problem here is that you're buying against a tight bear channel. When you're buying against a tight bear channel, chances are there are sellers at the top waiting. Look, we extended down, is we went up, is sellers are right there. Let me extend this. Trying to get those highs as much as possible. Yep. Here we go. It's just there you go. So is we tested, they're selling. We can't seem to close above the upper trend line. And is so that means we're gonna swing. Where do we swing? All the way down to the low, maybe even lower. Oh look, that's the extension right there. So is bears relentlessly sold. Anybody who bought here didn't pay attention. Even if you don't find your channels, maybe you're not a good channel finder. Fine, then just put your trend line, okay, right there. That high, that high is those highs. Connect maybe, I don't know, you can't really connect that, didn't reach, but is the reason why this one went, it needed the tag for the third time. That is the third touch, and finally it comes down. Is you got another trading range here, and projected down, you should be taking profit there. Now, what if you actually is just measure the bar bodies, but not the wicks, but the break happened right there. I would also include those. So we came very close to the 2R. So here it is. The went up, came down. Yeah, I would say this is successful. It's a one tick failure, but who cares? It's the end of the day. Yeah, they will trap you for sure. But anyway, so it was a relentless selling. Is one thing that I kept telling everyone in the trade room, that is this is it's a pretty obvious what's going on here. We have a nice always in short. We have a bear flag, double top neckline. Okay, so when the next time when we get back to the moving average, most likely is that'll be 20 bars. First touch, bears will sell. So look for another double top. It's no different than here, and then sell. So don't be fooled, fooled by these strong legs up. That's only going to create a trading range, but bears are trying to sell. So look for some lows, maybe bull gaps, which we found one. It was right here. Is the open of, so I told everybody on the hourly chart, I'm sorry, daily chart, this is an almost outside down day. Is now it's trying to come down and close below the open of yesterday. It could truly become one if actually two things can happen. The is today needs to close a bear body right there below the open of yesterday or the low of yesterday. But we didn't do that. We came down and tested, and then we bounced. So now we form a huge trading range. Tomorrow, we're probably going to sell down here, and then we could actually reverse back up. We're going to go up to those levels. I don't know if market can reverse all the way up, but maybe we can do 50% pullback of yesterday. So here's what I would do. If tomorrow we come down and make a new low and then reverse from that high to that low, I would measure and I would look for a 33% and 50% pullback. Okay, that's what I would do. Is strong close today. Probably wants to test its low tomorrow, so that's why I said we might actually start to sell 50% of the time. We might get a follow through, and then is at the end of the second hour, we go up sideways and reverse back up, or we're gonna sell again. I don't know. We'll see. Is right now it closed as a pullback to the moving average, but we might need to come back and test this area tomorrow. What about tomorrow becomes a reversal? Because we are overlapping with last 3 days. We are overlapping. Um, Problem here is that bulls had a close above their 50% but we went and tested yesterday's high before coming down. So this is done. This is spent. So now what tomorrow needs to do and come down and test today's low and maybe these lows. So we might actually sell a little bit, then start the reverse back up maybe to the midpoint again. I don't know. According to L, is we could have 100 or so bars to the sideways on the daily chart. It's pretty, strong sell-off. Might need to go sideways for a while. So you had a trading range day open. We tested yesterday's high, okay, is slightly, but we couldn't stay above it. We couldn't get strong bull closes. Then we closed a strong bear bar 15. Time to exit if you're still long. You need to reverse this and sell back down to where the bears are stuck. So you have stop orders right there, but while you're getting the stop orders, you better be counting your legs and then look for a pullback. Now there were bulls pretty strong there, trap. They're upset that the market reversed back again, so they will buy lower and try to get back to where they bought, which is from underneath bar 4. So we ended up going to bar 2 low and we couldn't go any further. So that means today is going to be bearish. Then we started to get more stop orders, but after every other 2-3 bars, market is getting a strong bull body. So to me, those are one bodies. Now, some will say this is actually a small pullback bear trend. It really isn't. It's not a small pullback bear trend. It's definitely a bear trend, but it's actually parabolic. Now, it's not parabolic in the sense of going like this, but if you actually look at these line chart, okay, you can see these gaps are not closing. So you got a gap there, right? From there and there you got a gap. I guess, no, well, I guess that's closed, but to me that's open right there. There, it's open. There, I mean, you can see how it's nicely coming down. It's actually pretty steep. So more gaps, you can see bulls are nowhere to be found. So you should be looking to sell this as, machines are steadily selling every pullback to the moving average. Tomorrow we might need to make a nice double bottom before we trap the bears to go back up. However, that'll probably going to put us into some kind of a trading range. Then I would look for 3 legs for bulls and 3 legs for bears. And then the 50%, if we start to squeeze, I look for a pullback and then buy again. That could give us a left shoulder, head and right shoulder. And I would double that measured move to there. Now that would give us the 50% pullback also, okay? And then from there on, I would look for a sell back down, okay? So tomorrow could become a bull day, in fact, but we'll see. First, I like to see the bears. If the bears cannot maintain, then I'm going to look for a reversal back above this trend line. And then I would, let's see. So you have a leg 1, leg 2, leg 3, pull back, pull back. That is going to be my projected target. I like to see this bear trend line broken, bulls to get above, and that's going to be my target. That is going to be my target, along with right is there. So if the bulls come in strong, first this is what I'm going to be looking for, and then somewhere around here we might actually continue to go up, but we need strong bull bars. We could come down, back up, get down, go back up, great, and now we get above like this. That's going to be my target. In the meantime, 1, 2, and 3, then I'm going to look for reversal back down here. If we start to go back up, that's going to be my target. Okay? All right. I am done with my session, everybody. I think one more question just came in. Let me see. Question is can you advise how do you get over doubts is hesitations to take trades setups? Most setups often look uncertain. Uh, just look for 1 hour, 2 hour. Something looks reasonable. Like is for example, let's see, bulls are going, right? This is great. Big bull bar is I would buy above it. Bar 6 breakout is okay. It's got an upper wick, but I'll keep buying, right? So that's first entry long above the inside bar 3. So that's probably sellers there. Pull back. Second entry long above bar 5. You should be at least getting is from here to there. Maybe I could put my stop underneath this, underneath this bar. That's basically a 1 hour. Okay, so look, we haven't really gotten that. But really, you shouldn't be measuring from there. You should be measuring from bar closed, bar open, stop goes there. That's your 1 hour. Or if you put it underneath that bull bar, inside bar, right, is because we're closing above the inside bar. So we're going to keep getting more bull bars. Go to the video course, bonus video course 15 and 16. When you have an outside bar too and an inside bar, when bulls are taking out the inside bars high, they want the 1 hour and they want the 2 hour. That's 92 ticks is above the inside bar. If you get it and the bars are closing above it, there's no thinking there. There's no doubt. Okay, this is gonna reverse back. This is gonna go to the 2 hour. Or you can get your 1 hour right there or measured move of this trading range projected up because bulls are closing very strong bull bars above the inside bar. So that should get follow through. Just is measure it. But then you got to pay attention. Bars are getting smaller and we started to go sideways. Either we're going to go take out these bear bars and the bar 10 high, or we're going to sell. So which way is it? Nobody knows. How would you know? If you look to see bulls are failing to close bull bars, that means we're not going to get another leg up, maybe another leg up. We're not going to get that. Bulls tried 12, then they tried again with 14, but nothing's happening. So now we got a huge bar. If you're still long, time to exit from below bar 15. Okay, look, you entered here, you made money, you took scalp, maybe you left the runner. Then you see the second leg selling with bar 15. That's kind of dangerous to stay in this long. You got to exit and then you got to sell. Now, if you sell 1 tick below or the close of is bar 15, your stop is above at the prior high. You should be banking 1 hour right there or whatever. If this is a measured move of the small trading range, that's where you're going to take some profit. But 1, 2, 3, 4 bear bars. And these bars are not getting any smaller. They're pretty strong. So now bear bars are closing below 1 hour. Maybe hold a runner. Just scalp. Maybe you entered with 3 contracts. Take out 2. Leave a runner into 2 hour. And take all of that off there as it's going to go sideways and up probably. Because we moved with leg 1, leg 2, leg 3. It's only fair that we move back to bar 19. Why is that? Why will we pull back to bar 19? Look, bears got the 2R. Bulls are stuck up here, right? They're stuck. Look, they tried to buy once. They bought above bar 9. I don't know why they would do that, but they did it, okay? Because look what happened with bar 10. So it came down, and then they bought again above a good-looking bull bar 13 and they're trapped. So everybody's trapped above 13. What do you think the bulls are going to do? They see these bars, they know a leg like this will probably going to get another leg down or 2. So they have to wait for something obvious, that is 1R and 2R. So what they're going to do, if the bears are stuck up here, they're going to wait for bears to get down to the 2R. They're going to measure it and what they're going to do is they're going to wait for market to get to somewhere average. That average is right here. Did they get their average? Even if they bought that deep right there, nope. When a market buys this low and cannot get an average break even, you have to be ticked off right there. Market saying, look, I'll give you something to minimize your losses if you held on to it. because obviously you are a new trader and you can't assess the situation that you should be exiting with a strong bear body closing on its low, let alone it gets another bear bar, right? It's obviously wanting to get down to the 2 low. So or at least the strong bull bars open and low. And if you still haven't exited, you let this go against you, then okay, you waited long enough, you bought down here at the 2R into profit taking, but you're not getting any break even. So what are you going to do? You have to exit because you have an opportunity to now sell lower. Market is screaming at you. This isn't going to go to the break even. Therefore, market is extremely bearish. You should look to sell. So what are you going to do then? Right? Well, there's not much to do here. You can also calculate like this. Maybe you took a loss right here. You exited underneath bar 15. You bought at the 2R. Okay, market gave you a break even, right? Because your loss is calculated from there. So that's another way to calculate. Maybe you took a loss there with bar 15. You were long. Maybe you were long above there. Maybe you were long here. You were holding a runner. You took some profit. And then you took a loss there. And you wait for 2R. Then you buy at the 2R or above a strong bull body. And that would be your average break even. Okay, you made some back. Others will buy the close or one tick above, and they cannot get, and they still cannot get their break even, which is right here. See, we came very close, but we cannot. These are indications of how strong the bears are. Is basically telling you there's no point buying against this trend. Just let it go. Just sell. Okay? Especially this is always in short. Now we're at the moving average. You're going to have to always think, look, I want it. Should I be a buyer? Should I be a seller? If I be a buyer, at least the stock bulls, are they able to get their break even easily, average break even? Because if they're not getting their average breaking 50% pullback from where they bought again scaled in, there's no point they're going to get any closer to their original stock contract place. They're never going to be able to do that. So that tells you market is favoring bears. And look for, okay, so it's very simple. Market is going up. Couple of bull flags is bull flag number 1, bull flag number 2, maybe bull flag, final flag, and starts to make a double top, takes out the neckline. Now you should be counting for bear flag. Bear flag number 1 is bear flag number 2. That point, moving average, if we're moving underneath the moving average, look for a nice swing and then pull back. If we make a double top and we're selling, look for that to be taken out. Pull back, sell again until we made maybe a leg 1, leg 2, leg 3, complex leg 3, and then you look for double bottom and buy back. It's just recognizing the patterns, okay? And that's it right here. We moved underneath. That's a bear flag. Here's another bear flag. This time we're not even touching the moving average. That's going to sell. Sell underneath a strong bear close. Sell above a bull bar. Go study the flags. Al talks about putting a sell order above a bull bar. Doesn't matter. It's stronger the better. Generally that's where the bulls get trapped. And here we didn't go above it, but they start to sell quickly because it's got an upper wick, right? Look, it's a strong bull bar. We go up and then immediately bear flag starts to form. It's a complex one, but this is a strong bull bar. Sellers above they're selling, right? So the market is telling you there's no point buying. Look to sell. Maybe wait for pullbacks to moving average and sell. And then here's another doubt killer. If a 20 EMA moves underneath 1 hour EMA, market is bearish. You have no business buying anything. They're going to trap you. Look to sell. Look for double tops. Double top at the EMA, but that's a bull bar. Don't like it. Even if it sells, we're probably going to get back to that bull bar. Oh yeah, we did. Look, now I have a double top right there. That's great. I should be putting another stop order right here as it comes down. Now I should be looking for a measured move from that high to that low projected down. I could bank that, and and we're breaking, and strong bear gap bodies, sell more underneath them. Sell. Start to see lower wicks and bull bodies, time to take some profit. Okay. Oh, look, another double top bear flag and gapping to the moving average. Sell again. You can actually even sell above is bar 71. It went up a little bit, but doesn't matter. They're trapped right here from that high to that high. That's a trap zone. Or don't sell anything there. Wait for a confirmation. That's your confirmation. Sell. Gap body. Ooh, 74. I'll sell underneath too. Keep the chart clean so you can see what's going on. Okay. All right. I'll see you guys. I don't know, when will I see you guys? When will I see you again? You guys remember that song? Da, 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 da. I don't remember who was singing that. It's one of the old songs. Oh man, I miss the old days. All right, let's see. I will see you guys tomorrow. Tomorrow, 9 o'clock sharp. Be here, be square. Okay. I'll see you guys 9 a.m. Eastern time. Bye, everyone.